Brian, I'll go to you. What do you make of the market's reaction to the idea that these two leaders had a conversation? And from what we can tell, at least what the president says, we had a very good talk.
I think it's really good because you've seen that space just get tighter and tighter and tighter and tighter in terms of where the numbers have been. This is part and parcel on why I think we're going to see continued volatility, because I think to be able to say that the coast is clear and the screens are green, I think we're going to have a little bit more volatility here until we get an actual deal, Scott. So I do ultimately think longer term, it's very, very good. We're getting closer and closer and closer, but that's why the market has responded on a short-term basis that we're having at least some clarity out of China.
You surprised, Bill, that the market's not up more than it is based on this phone call that we've been hearing about, anticipating, and now we finally have on the Thursday of this week? We thought it might happen Friday, weren't really sure, but now we have the details.
I do think there was some levitation this week in anticipation of that. But I think we do need to hear more facts. But also, let's acknowledge the run that's happened and the overhead resistance that we now must chew through. I think it's really consolidating very nicely. And if we continue to do that, I think it will party like it's 2019. We'll see new record highs. But right now, and I follow the futures, you look back at the February closing level is 60.14. There's also a gap above there from previous close. So 60.14 in the S&P to 60.50 brings a tremendous amount of resistance. But I think a good consolidation, I do think we'll get through there. It's just maybe an intermission here at the moment.
Jimmy, we're 2.5% or so away from a new high on the S&P. We are working on the best quarter for stocks since the first quarter of 1 year ago in 2024. And we do have a jobs report, oh, by the way, that's looming especially large, just given some of the other data points that have come out this week that have pointed to more weakness in the economy.
They certainly have. And I'm not going to freak out about it. I'm not suggesting anybody panic about it. But, to take the economy and using an analogy that my Midwestern brothers will appreciate here, I mean, the ice is not thick or thin that the economy is skating on, but let's not stress it out too much. And what I mean by that, you asked a second ago, are we surprised that the market's not up more? I'll say this, I'm surprised it's not down because of this stuff about rare earth elements. What that's leading to is things like we're talking about shutting down auto production. That's not good for an economy that is still on skatable ice, clearly is still on skatable ice. But you take yesterday's ISM non-manufacturing survey, you take today's jobless claims, and it just says, let's not put any more weight on this. So why is the market up? Because President Trump and Xi are talking. And that shows that President Trump is serious about resolving this. He doesn't have his head in the sand. He knows this is serious business. He loves volatility, and we're stuck with it, but he knows he's got to solve that problem.
Steph, the market's been nothing if not resilient, and Piper Sandler points to that fact today and suggests because of that and how impressed they are with that stocks are heading higher this summer, that we are going to have a good summer. We'll get behind this. We'll get this trade stuff behind us. And one way or another, this bill gets done, whether it's exactly in the current form or not, you're going to see it because the Republicans hold Congress. So they're going to get it through. What form it takes may be a question, but maybe it doesn't even matter at the end of the day.
Yeah, I mean, eventually we will get past this. This whole thing is so tiresome, right? I mean, it's like every day, it's up, it's down, it's up, it's down, progress, no details, though. So we have to get the details for us to feel better. But if you wait to feel better, the market is going to run away. And that is because of what you just said, in that once we get through tariffs, we can focus on the tax bill, we can focus on deregulation. The Deputy Assistant Attorney General yesterday gave a speech and talked about how positive he was and the DOJ is on M&A and how important it is for growth. So we can focus on that coming down the pike. In the meantime, yeah, I think the economy is actually, it's okay. It's actually stronger than what I had expected it to be. I don't think it's at the 4% level with what the trackers are telling you, but something like 2 to 2.5% is very healthy. And yeah, Jimmy, I'm not happy with the services numbers yesterday and the initial claims today. Initial claims are still historically very, very low.
I'm not freaking out.
And continuing claims actually fell, and the JOLTS numbers were good, and Challenger Gray layoffs were down 11% month over month. So let's not panic. I'm not saying you are. Yep. Let's not panic about the initial jobless claims right at this very moment. And if you believe that the job market is continuing to be strong, well, guess guess what? We just had great personal income numbers and actually decent spending numbers. Consumer is doing just fine.
Okay, we just had the opening of Circle, the IPO here on the floor of the New York Stock Exchange. That's what the commotion was about that you heard in the background, of course, with the signature bell to officially open that stock. And we'll track it. It's highly anticipated, and it's a very, very large gain right out of the gates for shares of Circle, CRCL. Keep that on your screen. We certainly will keep it on ours, and we'll let you know a stock that's up 144+% in its very first moments of trade. Let's continue the conversation since we're talking about this. 1 month sector leaders, okay? Where the action's been. Technology, Brian, up 10%. Yay! Let the hoopla do its thing. I mean, that's one of the great things, frankly, about our system of capitalism is you witness events like that and you see it in person here on the floor of the New York Stock Exchange, and you can feel all the what was anxiety now to just sheer jubilation as a new stock, and all these people, congratulations to them as it opens officially for trade. Technology, is it going to continue to lead?
I think it is, Scott, and we've been very fortunate to be overweight technology for several years now, but the thing that we have differentiated ourselves is that we're not overweight the Magnificent Seven. We're overweight other areas of tech, and what we've seen in so far in 2025 is more of a broadening out of tech, and we're seeing better performance from other areas. Doesn't mean that Magnificent Seven isn't going to do well. We still have very strong core positions there, but we think tech with respect to growth, but then also take 2 steps back and think about what these big tech stocks provide. They are the liquidity of the market. When you want to get in or out of the market, you use those tech stocks. Just like in the 90s, you use consumer staple stocks. So I think tech is here to stay, and the growth is real.
I'll double down on tech is here to stay. I do think it's 2019. I've been saying this, and we're going to have a really strong second half of the year. Where I think tailwinds really do come from is if you look at the Magnificent Seven, we are at weight and overweight some of the Magnificent Seven names. You only have Meta and Alphabet that are actually positive on the year. NVIDIA is kind of flirting into positive territory. The ones that are, it's Meta and Microsoft.
Yeah.
But I think the ones that are negative, you're going to start to see some levitation in there. There's room for them to run, and that's where I think we're starting to see outperformance in the second half from those. And then if you look at the GDP, we talked about the economy. Atlanta Fed at 3.8, maybe a little lofty, but Satya Nadella, the Microsoft CEO, is talking about higher GDP as more spending, and more spending feeds into AI trade, and then NVIDIA is powering that higher as well.